Thank you all for joining. We're just going to give folks a few more minutes to come into the room and get situated. All right, thank you for joining CNHED's Community Development Week, where we're going to speak on navigating lending options for your small business. I would like to remind everyone that this event is a webinar. You will not have the ability to speak, only the panelists will have that ability. We are recording this webinar, and if you have any questions during the webinar, we ask that you put your questions in the chat box below for a possible Q&A at the end of the event. If you should have any technical difficulties, you can reach out to Raina Whitted or Hallie Holmes for assistance. I will put our email addresses in the chat box. And now I would like to turn the meeting over to Stephen Glade, President and CEO of CNHED.
Good afternoon, everybody. Welcome to day 2 of DC Community Development Week. For people who may not know, every year CNHED celebrates the work of the community development field by sponsoring Community Development Week. Actually, often it turns into Community Development Weeks, as sometimes we have events that carry over, as we will this year. In addition to this week's activities, there will be later in the month a panel on eviction prevention and another panel on systems change that we are working on. So for all of the events, look at our website and you will see the events that are taking place the remainder of this week. I want to particularly draw your attention to a panel we're having on Thursday at 1 p.m. on DC into the future. That panel is intended to kind of pull all of our heads out of the sand a little bit and look at what the district might look like 5 years from now, post-pandemic learnings, and so forth. So I want to encourage people to look at the website and see that event. I want to start by thanking Hallie, Henry, and Raina from our staff who put together Community Development Week. It's literally months of planning to identify the activities, the topics, and the speakers, and arrange the webinars. And I want to particularly thank Yvette Banfield from our team for working on this. But I also have a special thanks to Marcella Willis. And I want to do a combined thanks to LISC DC for their Orman Newsom Community Development Fellow, who is Marcella, who worked on this guide. I am really impressed with the work and the tenacity that Marcella has put into this, developing this guide, and I will kind of connect the dots on those comments as I talk about the guide very briefly. And so we all know that small businesses are the big economic engine that drives our economy. This is in every city in America, if not the world. And you may ask, why a small business lending guide? There are people whose primary mission it is to lend money, and their businesses in need, and they should just easily find each other. Well, what we found in doing this work is they don't easily find each other. I don't know if it's as bad as a game of pin the tail on the donkey, but they don't always connect easy. And we, for the last couple of years, have been tracking this issue, working with our CDFIs, working with our bank partners about what their lending challenges are, as well as intermediaries who are involved in it. We've also talked and engaged with small businesses, and we really thought this would be a simple matter, if not simple math. We found out it is always not the case. Sometimes businesses don't have relationships. Their relationships with lenders are often checking accounts and checking accounts only. In some cases, they're not familiar with products. They don't know which products lenders offer and what products they even need. And so as a result, CNHED, Yvette, and Marcella had the infinite wisdom to develop this lender's guide. So I want to again commend Liz for giving us the fellow. I want to commend Yvette for having the vision to see the need, and then really commend Marcella for the tenacious work that she's done to get us to the point of launching this lender's guide today. And with that, I'll turn it over to our Vice President for Economic Policy, Yvette Banfield, who will kick us off.
Great, thank you, Steve. And good afternoon, everyone, and welcome. I want to just expound a little also on Steve's comments before introducing Marcella. The Small Business Lenders Guide really is the brainchild of the CDFIs. And that part of, and the whole idea around it is really to advance and find solutions to improve the ecosystem for small businesses. And, when I think back on when we came up with this idea couple of years ago, we attempted to move forward with this project at least on 2 occasions, but for various reasons, which I won't go into today, it never really moved forward and never gained traction. And so when both Brian Franklin and Tupa Hokava reached out to us from List DC to invite us to apply for the Aumenta Newsome Fellowship Program, I immediately thought of this project and I thought this would be great. But then when I met Marcella, when we interviewed her, I immediately knew that she would be the person that would be able to complete this project. And when we started on this journey, thought it would be fairly simple, but it really did become more complex. And we expanded the project because of her insight and her ability to engage with all of the stakeholders. And so we're equally delighted to kind of have her join the team to implement this project. And it's been an absolute pleasure working with her. And so I just want to encourage the small businesses to bring your ideas to us. And of course, our partners to also think of CNHED because we are solution oriented and solution driven. And this product is an example of that. And so with that said, Marcella, as Steve had mentioned, she's going to walk us through the guide to small business financing, navigating lender options for your business, which the product or the document is entitled. You can find it on our website. I'm pretty sure we'll post during this presentation or this event this afternoon, the links where you can go and find the document, which is now live. And following Marcella's presentation, she will lead and moderate the panel discussion. So a little bit about Marcella. Aside from just being really easy to work with and a pleasure, she brings 20 years of experience promoting access to finance for underserved customers and businesses in an international development setting. So it was really great that she could transfer her knowledge and information around financing in the international sphere into what happens domestically here in the United States. She has managed inclusive finance programs and worked with microfinance institutions. As a consultant living in Washington, D.C., she has worked with a range of projects promoting digital financial services in low-income countries. And so with that said, it is my absolute delight to introduce Marcella. She probably has engaged with some of you who are joining us this afternoon. And so Marcella, I turn it over to you.
Wow, thank you. What a great introduction from both you, Steve and Yvette. Thank you both so much for that introduction to the event, to the guide for me as well, and about CNHED's important work in the small business community. I really appreciate it. So just to give you the high level agenda for today, first, we are launching CNHED's Guide to Small Business Financing, Navigating Lending Options for Your Business. And this, it's really hot off the presses as of this morning. And I will give you a brief overview of the guide and how it can be a tool to promote equitable access to financing. And then we will have a conversation with our panelists about financing and equitable recovery for small businesses, which goes with the theme of Community Development Week. And finally, we will have some time at the end for questions from the audience. So if you would like, you can please put them in the chat, and we'll have about 10 minutes at the end for those. But before I jump in, I also need to express my gratitude to both CNHED and LISC DC for this opportunity as a Newsom Community Economic Development Fellow this year to work on this really interesting project over the summer, and especially to Yvette, who worked closely with me and guided me through the creation of this guide for small business financing. And it has been such an incredible opportunity for me to learn about the ecosystem here in DC, and about the great work that CNHED does, as well as many of the other partners who I've been able to interact with. But also, in particular for LISC DC, whose fellowship was really an opportunity to learn about the whole community and economic development sector here in the US compared to my experiences that I've had overseas. So that's been very enlightening for me. I also, of course, need to thank the small business owners who I talked with doing my research, and they shared with me their experiences and talked about their needs for financing and many of the challenges they have in accessing financing. So they spent a lot of time. I'm very gracious for that. And finally, of course, it couldn't have been created without the considerable support from the lenders and small business support organizations, many who provided detailed information on their loan products for this guide, as well as insights and key advice for small business owners to help inform them on how to prepare for borrowing and how to engage with lenders. So again, thank you for everybody joining us today, especially our panelists. And first on the agenda, as I said, is an overview of the guide to small business financing and navigating lending options. And it is available on the CNHED website. And it's a 3-part guide, including a summary of lenders in DC and detailed lender profiles for many of those lenders, and then a part on high-level guidance to small business owners to help them in their preparation for borrowing and engaging with lenders. And as Yvette said, the original idea was to really just create a simple, comprehensive list of lenders with transparent baseline information about their products and services. The value for small businesses is that we can streamline their search for the right type of lender and financial product by having a baseline of comparable information that they can use to facilitate their comparison shopping for finance. There's also great value in this guide for lenders because they would really appreciate to have customers, small business customers coming to them who are more prepared to engage, and when their financing needs match the mission of that particular lender. So for this project, I reviewed dozens of lender websites and dozens of training resources, and there is a lot of great training and technical resources out there for small businesses. And I interviewed about 6 small business owners and lenders. And based on this research and the needs expressed by business owners, the guide, as Yvette said, transformed really from just a simple list of lenders to the 3-part guide that it is now, because we really wanted to be more responsive to the needs of those small business customers. I have a few high-level key takeaways from my research in creating this guide that I think are also relevant for the conversation today on how inclusive access to finance for small businesses can be promoted more with resources like this. Some of you probably already are very familiar with some of the challenges that small business owners face in their quest for financing, but the ones that really struck me, because when I started this research, I thought, well, I'm going to go into this research as though I'm a small business owner looking for financing. And so I really went into it to dive into that research, and I found that it is very time consuming to research lenders and their loan products, especially when small business owners are short on time and bandwidth. And I also found it can be very confusing to try to understand all of the requirements and the eligibility requirements, the underwriting process, and the technical jargon to understand all of the different financial products out there and how to access them. I also found it's very challenging to compare lenders when they often present information slightly differently, or maybe some information is incomplete. So the information that they have to prepare, to the required documentation that they have to prepare to apply for lending, is also quite significant. And I can imagine how challenging that is for small business owners when many of them are masters in their trade, but lack the time and the bandwidth and the skills to really prepare all that financial information. I was also interested to see how lenders are challenged to serve these small business borrowers, and found that many of them really want to serve these small businesses, but they have to manage their risks. And so would really prefer to have the potential borrowers coming more fully prepared, which is partly what led us to create the third part of our guide. Overall, I found it is very challenging to get full transparency on lender information, their underwriting process, their eligibility requirements, and pricing. And this can be very mystifying for small business borrowers. So with that, those challenges, I think there's a great need for small businesses to be supported by the different community-based organizations and CDFIs that work with them on training and coaching to be more financially savvy and better prepared to access finance. And it's interesting because it's similar to my experience working on access to finance in other markets overseas, because encouraging banks to serve small business customers requires an extra investment, which they often may not be able to do for a variety of reasons. And I think this is where organizations like community development finance institutions, microfinance institutions, and other nonprofits play a really critical role in supporting small businesses. So we recognize this guide is just one tool, but we hope it will provide value for the small business community with useful information for small business owners and the support organizations that work with them, as well as lenders who want to attract small business borrowers. So as Yvette said, the guide will be available on the website as of today. And that's kind of the high level intro to the guide. Happy to answer more questions about that. But we have a great group of panelists here today to have a conversation and discussion about inclusive and equitable recovery for small businesses from the pandemic and the role of lending. So I will turn to the panel now so that we have time also at the end for questions from the audience. We are fortunate to have several of the people who generously provided input for this guide. I have several questions prepared and teed up for them to share their insights into how tools and resources like this guide can be valuable for promoting equitable access to finance as businesses recover, and to learn what lenders are doing and what is the role of lending to promote equitable community development. So we have 5 great panelists. I am going to ask each of them to introduce themselves, to take 1 minute to introduce yourselves and briefly describe your organization's role and mission in supporting underserved small businesses with lending and/or technical support. And then we'll have a discussion where I will start by fielding out the questions. I have 3 big questions teed up, and then we'll hand it over to the audience questions. So to start with our panelists, I will just start in alphabetical order. And so I will ask Daniel Friedman. He is the Loan Operations Manager at Latino Economic Development Center, LEDC. So Daniel, maybe you can start by giving us a 1-minute highlight of yourself and your role and LEDC.
Thank you, Marcella. Yeah, and I'll thank everyone in advance for patience with my unstable internet connection here. But I'm connected with the phone audio, so I shouldn't have any interruptions there. But anyways, I'm here representing the Latino Economic Development Center, which was founded in 1991, so 30 years strong. And the mission is to help associate economic advancement of underserved or low to moderate income Latinos and other underserved community groups in the Baltimore, Washington area. And a couple of years ago, we actually expanded to Puerto Rico as well. And my role is Senior Loan Operations Manager, so I'm overseeing our lending departments, our underwriters as we disperse accessible financing. And we do have other departments around direct community investments, which is essentially grants that really came out of the pandemic, and the technical assistance department, which is sort of like a small business development center, one-on-one business advice, as well as some other interesting programs around women entrepreneurship and commercial corridors that are undergoing revitalization, connecting those business owners with consultants. So not to mention our housing department. So there's a lot going on at LEDC, and I'm glad to be here and share some of that with you all. Thank you.
Thank you so much, Daniel. That's fantastic. And Daniel has been really helpful in the development of this guide too. So given all you have going on, we really appreciate your support. So now I will ask Kelly Klein, the loan officer who works at CDC Small Business Finance, if you could give us your 1-minute intro.
Absolutely. Yeah. Thanks everyone for joining. My name is Kelly Klein. I'm a loan officer at CDC Small Business Finance. I've been at CDC for 4 years. CDC is a nonprofit alternative lender that helps small business owners get access to financing for those that haven't been able to get financing from a traditional lender, such as a bank. So, let's say maybe you have weaker credit, the business hasn't, it's a startup, maybe you have weak cash flow, different issues that might have you declined by a bank. We have more flexible underwriting guidelines, but are just at a slightly higher interest rate outside the bank. We service small business loans in the DMV area, Detroit, California, Arizona, and Nevada. And we offer both SBA loan options and non-SBA loan options.
Great. Thank you so much, Kelly. And Kelly, CDC Small Business and LADC are all in the Small Business Guide, so you can find more information about them there. So I will hand it over to Olivia Lay, who is the Director of Monitoring for the Hilltop Microfinance Initiative.
Thank you, Marcella. Hi, everyone. It's great to be here with you. As Marcella mentioned, I am here on behalf of the Hilltop Microfinance Initiative. We are a 501c3 based out of DC specifically, and our mission is aimed at promoting financial independence and economic growth within the DMV. So we have 2 main services. We do small business loans that are targeted at small business owners who are traditionally excluded from the commercial lending system. And so we walk through that entire process. I'm in charge of our underwriting department. And so we walk our clients through that very holistic process that I'd be happy to get into further if people have questions about that. And we also have a group financial coaching service. We have actually been teaching Afghan refugees over the last year, and we work with adult charter schools within the area as well. And our main goal with that service is really to bridge that financial literacy gap as well, which is such a huge part of the work that we do. And so overall, those services kind of work together in conjunction just to promote overall economic empowerment of underserved communities in the DMV. So thanks for having me again. It's great to be here.
Yeah, thank you so much, Olivia. And you just really underscored how important it is, all of the additional technical training and coaching for the small business owners around financial education. And so that's great to hear what you do. I will now hand it over to Camille Nixon, the Project and Capital Access Manager at DSLBD, who they also do a lot of great training and coaching. And I will let you tell us all about what you do at DSLBD, Camille.
Great. Thanks, Marcella. Hey, everybody, and thanks for having us. I'm Camille Nixon, and DSLBD, which is the Department of Small and Local Business Development. We're a DC government agency that supports DC-based businesses and DC residents exploring entrepreneurship in a variety of ways, including accessing to capital, be it grants, loans, pitch competitions. We have a lot of training around accessing capital, but also building your financial health, that financial literacy, so that you can be a stable business and take advantage of opportunities, whether it's funding, revenue, other things. We have recently launched a 0% crowdfunding loan product called DC Kiva Hub, which is in the new guide. Check out the guide for links to all the resources that I'm mentioning right now. And I'll drop in the chat a way to just keep abreast of some of our other financing activities through our DC Business Funding Alert. Great to be here. Thanks for having me.
Thank you so much, Camille. And I have watched many of the presentations that DSLBD hosts on training and technical support for small businesses, and they're great. So highly recommend them. So last but not least, Lucien, I think it's Lucien Smith, Small Business Advisor from Washington Area Community Investment Fund. I would love it for you to give us your 1-minute overview of the work that you're doing with WAKIF. If you would like to unmute yourself and take it away.
Yep. Hey there, everyone. Lou Smith, Lucien, everyone calls me Lou. Here with the Washington Area Community Investment Fund, which has been established since 1987. I've been here for a couple of years. I was in commercial lending for about 11 years prior to that, and banking 5 years prior to that. We offer here a mix of products, but specifically in 2 veins of service, loans and also technical assistance. And as a small business advisor, simply we help business owners to address, unique challenges that they're facing, and helping them to take advantage of new growth opportunities out there, which often involve capital. Our loans are both on and off balance sheet, SBA and non-SBA. So of course, if there's a way that we can make it work, then we certainly try to. Additionally, we have a new line of credit product, which is really built for businesses that have contracts and they invoice in order to be paid, in order to bring their revenues in. So we can kind of get more into it here with the questions and things that may come up during our session today, and I'll end it there.
Excellent. Thank you so much, Lou. And yeah, it's great to hear all of the great work that the CDFIs are doing here. I know you might think, well, there's an absence of banks here today. We were just not able to get any for this particular panel, but we have in the guide, we have a mix of banks and CDFIs and microfinance institutions and crowdfunding. So please check out the guide to see the great range and variety we have there. So now on to the questions, and I will direct them initially to someone, and then we'll see if people would like to chime in, and hopefully that will work. I know we have a lot of great panelists here, so we'll try to see if it's organized in that way. I have 3 big questions, and I will start with my first, which is a more general question. And this is much broader. The guide that we are launching today, that was produced to really try and help level the playing field and support underserved businesses to access financing by collecting and organizing this critical information to share with them. We know that there are many disparities in access to finance that existed before the pandemic, and this guide is just one tool. So what more needs to be happening in the financial industry to better support underserved, women-owned, and Black, Indigenous, and people of color businesses? So this is really broad in terms of what you think needs to be happening more in the financial industry to better support underserved businesses and promote equitable access to financing. So maybe, again, I will just start off with Daniel. If you have some thoughts and could kick us off, and then we'll see if others have specific ideas and points.
Sure, thank you. Well, that question makes me think about sort of the way that our economy is set up, in that, the less well off you are, or, poorer you are, the higher your interest rate is. And really, it's just quite easy to spiral into a worse financial situation. So it is important to have underwriters that really look at the context of someone's experience. People do fall behind on bills. There's things happen with, whether it's medically related, some other personal life event, and to really build that compassionate, holistic view where you can, add that qualitative assessment to the quantitative assessment. And I think, unfortunately, certain loan amounts just aren't profitable for banks to go for. And so I think just supporting CDFIs, the ones on this panel, is really the way to make sure that that ladder exists from, sort of the starting point, or maybe a little bit stuck in the mud, to really growing and getting that bank loan eventually.
Yeah, thank you. That's a good way to start off in terms of looking at that holistically for the borrowers. And, there's a lot of emphasis often on credit scores and not having the time, or the underwriters who can think about that more holistically. Does anybody else have any thoughts? Lou?
I'll add in, I think that one huge difference in our space, especially as a CDFI, when we're compared to some of your traditional financing products out there, I mean, yes, we do not really care about your credit score as long as you're, current on your bills right now. And we also have a very lax underwriting criteria when compared to some of your other more traditional products out there, but we're not known. And so advertising is huge. When you have fintech companies that pay $50-$60 a click when you type in business loan on Google, that's a huge advertising budget. Oftentimes they're only looking to break even on the first loan, and they'll make money as you keep coming back and back and back as those products draw you in and break many business owners. But, just in terms of being able to get the word out there, programs like these, advertising that allows for people to even know that CDFIs and other alternative funders exist is huge. And so we, at Wake-If especially, when we're talking about woman-owned businesses, minority-owned businesses, 80% of our clients here are women, female business owners. And so many times I think what the consideration needs to be given in terms of, educating the public about what resources they have access to and how to properly use those, and to have a mix of products that they can pull from. That can be personally, it can be lending on the business side. Of course, if you have credit established independent of your social security number, linked only to your employer identification number, business credit for your EIN only, then you have other possibilities for you out there. So there's a host of things that we can do in terms of educating people about what's available to them, and then also where they can go and get it. And so I can get more detail, but I'll leave it there.
Yeah, great. Thank you. I have to say that when I was doing all of this research with the small business owners, there is so much great information out there, and CDFIs are doing so much for this particular segment. And it is a matter of many, I think, don't know about it and don't know how to find that information. So I completely hear you on that. Does anybody else have any thoughts in terms of like the industry-wide? What are some key things that need to happen to support these underserved businesses at the industry level? Kelly?
Yeah, I'll touch on that.
Oh, sorry. Yeah, go ahead, Kelly.
Yeah, I think looking at different ways to underwrite, I think we're so stuck in this mindset of doing things the way that things have always been done. And, obviously that has kept out large populations of business owners. So, rather than looking at a traditional FICO score, some people don't even have credit history, but they would be a great client. Looking at maybe their utility bills or their on-time rent payments. One thing that we've started doing is we do pull credit, but we are blurring out the actual credit score so that we don't have any biases. Lenders sometimes, maybe you'll see a low credit score, but really we care about, what happens in the past, maybe that had those late payments, maybe you were unemployed for a short period of time, there was a medical, instance that affected the, previous late payments, anything like that, but not having that score, that might have us just look at the client in a different way. But I think we need to be more creative in how we underwrite the loans and not solely look at, debt service coverage, FICO credit score, because that's just not working in supporting these, in underserved communities.
Yeah, thank you. That's great. And that goes to my second big question, but I know that Camille, I think you wanted to say something.
Oh, yeah, just very quickly so we could move on. Just to add to Kelly's point that having a way to underwrite people on more broader, more flexible terms. I think that's something that banks may never get to. So I think infusing more money in local lenders. I know DSLBD, we give out funds as loan loss reserves or funding to start micro loans through our local lenders, and having more of that money get infused out into those lenders, because not only will they have the ability to be more flexible because they know the business in a broader sense. They also have connections to businesses that lenders will spend as much money as they want online, but there's a real connection that the CDFIs and other local supply providers have made connections in the community, and that will just like fast forward the business's access to this funding if it goes out through those local lenders.
Yeah, thank you. So I guess that does help me segue into the second big question that I had, which was more specific about what lenders can do. I see, the financial industry, there is, at least from my perspective, given in the last, since the pandemic, there's been more focus on CDFIs, and there has been more channeling of funding through CDFIs since the pandemic. Like, that's my perspective. So I hope that that is something that continues to go forward as businesses recover, because it does seem like the segment of small businesses who are underserved are being much more marketed towards by the CDFIs and MFIs in this time period. So in the industry, I think that that's something that hopefully will continue. In terms of my second question, it was more specifically on lenders themselves, and it gets to exactly what Kelly was saying. Underserved businesses have historically experienced greater barriers to access credit. So how can the small business lenders make systematic changes to their lending practices to ensure more equitable access to finance for recovery from the pandemic and going forward? And I think one of the points was how you deal with underwriting and credit scores, and looking more holistically. I wonder if anybody else has any other thoughts on that. I don't know, maybe Olivia, if you have any thoughts in terms of the lenders specifically.
Yeah, absolutely. I would definitely echo what Kelly was saying. I think CDFIs and MFIs are already doing such a good job at targeting those specific systematic changes and systemic changes. With HMO5, for example, credit scores are oftentimes some of the last factors that we even look at when looking at a client's application, because there is so much more there in terms of their credit history, on-time payments, like Kelly was saying, whether they're paying their rent, their utility bills. There's so much more there. And I think that we are in a lucky position in that we do get to work with clients kind of more one-on-one, which I would say banks don't really have the luxury of doing, and getting to know their character. So in that sense, reliability as whether they're giving us their documents, whether they're responsive to things that we're asking for, and really able to answer our kind of tougher questions on business, taking that more holistic view is really, really important. And I would also echo that even though we are already doing such a great job with this, COVID and the pandemic have obviously exacerbated existing inequities specifically for BIPOC businesses. And so adjusting our practices even further. I know HMFI right now, we actually dropped our interest rate from 6% to 1%, which is kind of an unprecedented change for us. We've never been that low. But a huge part of that is again, making our services more accessible. And I think part of that goes back to Lucian's earlier point about advertising and who we actually are targeting with our outreach. That's another point that we're doing. But those are just a couple of examples as well. We are also currently working on, we don't currently report to credit unions or to people who actually like report that credit. Because we aren't officially doing that, but that's something, again, if we can give microloans, which is what we're doing, and just even if it's something like as small as $500, but being able to then increase our clients' credit through those smaller loans over time, which hopefully can build them back up to then being able to access some of these more traditional services. I think that's something that is such a unique and specific role that CDFIs and MFIs are able to do as well.
Yeah, that's great. Thank you. I have so many interesting thoughts because overseas in many low-income countries, there is a really big push to look at how to getting away from credit scores and looking at the transactions that small business owners make, such as looking at their receipts and their payment transactions and trying to capture that data because you can really see the cash flow and you can see the functioning of the business by so many things other than just like a credit score. So that's a really interesting point. Anybody else have any thoughts specifically on lenders, how they can make these changes other than the underwriting, the marketing, the credit scores?
Just, I think if we really look at it, changing the traditional lending landscape is, I'm not going to say impossible, but the most important data point, which is the ability to repay, has to be there. And so, even if banks, traditional institutions would like to pair with CDFIs to sort of administer other types of loan funds, similar to say how they handle CRA money with other nonprofits, that would be great. But no matter what type of programs we have, the types of loans, flexible products we have, if that capital isn't paired with advertising budgets to actually get out there to the people will never know about them and they won't be able to take advantage of them. So I just want to harp on that point because most people have never heard of the local CDFIs in their community. They haven't received a piece of mail. They haven't seen it on Google. They haven't been cold called. It's hard to compete with those major engines out there that profit in this industry, in this space. But we're the places where people will be able to actually qualify and receive that funding. So I'll rest there.
Yeah, that's really interesting about the marketing. I wonder, I was fortunate in this LISC fellowship to learn about a lot of the other community-based organizations that are working, not specifically on lending, but working in the community on many different issues, and wonder if the CDFIs and those other community, like the streets, Main Street organizations and such are also a good partner in terms of advertising and marketing of that kind of information in the community. I wonder if anybody has anything else. I might go to the last question that I have, which is a question directed more at guidance for small business owners themselves. We found, there's a lot of information out there for small business owners. We tried to put some of the high level pieces of advice in our guide, but what do you think are the top 1 to 3 pieces of advice to small business owners who are beginning or who are new in their search for lenders and loan products, and how to prepare for success? Like, what are the top 3 pieces of advice to small business owners to help them prepare in their search for lenders and loan products? So I don't know if anybody in particular, I know Lou, you're a small business advisor, so of course you work a lot. I actually even saw one of the great trainings that you did for small businesses once online. So maybe if you had to pick just top 3 pieces of advice for small businesses, what might you advise them?
Sure. So the top 1 to 3 pieces of advice to help prepare small business owners for dealing with lenders. I think that the number one thing you have to do is understand who your customer is. And so that's going to dictate in many ways what types of financing you can qualify for. If you're a company that markets its products or services to consumers, that's one thing. And then of course, if you're a company that markets its products to other businesses, or if you market your products and services to the government, you're going to qualify for different types of financing out there. So if you're business to consumer, you have to understand that it is going to be a little bit harder for you out there in the marketplace, because you're going to have to prove proof of concept that the market actually wants what you have to offer. This is going to be something where you want to concentrate heavily on business credit. Again, establishing credit for your EIN, totally independent of your social security number. And that's going to be about a 6 to 12 month stint where you're building out your credit profile, trade lines, et cetera, to have access to credit cards and things of that nature. You're also going to have to heavily rely on other sorts of collateralized products, such as lending against your 401k, maybe a home equity loan, et cetera. That's for if you're business to consumer. It's just a little bit tougher for you out there in the marketplace. But if you're business to business and you function on a contractual basis where you invoice on a monthly basis, then there are products available to you, such as invoice financing, invoice factoring, where you are invoicing your client, but letting a lender pay you in advance, sometimes 85, 90%. On what's going to be paid to you within the next 30 to 45 days. And if you're business to government, then of course, there are specific entities and lenders out there who will fund or finance the ramp up costs for you to get started with that government contract, and those where you can have a line of credit that will work to, pay your overhead until you're able to invoice against the government and get paid. Generally speaking, you won't be able to use invoice financing or invoice factoring with government contracts, because you can't assign your invoices to anyone else. They won't pay out to anyone except for you. So I think that you have to have a toolkit of sorts where you are prepared with several different products. You need to have a line of credit. You need to have a lender whom you have a relationship with, where you can go get a term loan if need be. And also you need to have credit cards as well. So I'm going to say my 1 to 3 things would be 1 to 3 different products at your disposal that you can kind of call upon or pull upon based on your needs at the right time.
That's really helpful information. I almost feel like we need to do a whole another addendum to our guide, Yvette, and add that key piece of advice as an annex, because that's really helpful. Anybody else, some key information? Camille, I see you just went off mute.
Yeah, I love everything Lou said. And to add to that, having a plan about your finances, knowing what you need to ask for. Often the lenders will want to know, even grantors will want to know, where you're at in your business. Even if you're a startup, to have your financial books in order. If you don't have anything, start with a spreadsheet, get a free thing. It'll help both for when you're trying to figure out what the ask is. So you don't over ask. You don't want to ask for 20,000 when you'll going to need to pay for the 20,000, not just 20, but the interest rate or other fees are associated. So there's a cost for borrowing, and can you afford that? Or maybe really the 8,000 is what you might need. So I'll help you narrow down your ask. I think it'll also help when maybe you ask for 10, but you're offered 6. What's going to happen with the 4? Can you still move forward with what you're trying to fund? What's the other source of funding? Going to what Lou said, try and stack up your sources of funding. Is it the loan and line of credit, or is it the loan and sales? Funders and grantors love sales. Even if you're at a startup stage, they love sales. I saw Tupa's question about what happens with businesses when it's been 2 years now almost that we're in the pandemic. And that for a startup, if you didn't have sales before COVID started, it's going to be really hard to demonstrate revenue if you're just trying to do that now in the COVID environment. So there's products that are interest-free. There are some grants out there, but I think demonstrating sales would be the other thing that I would say. Having a plan, being able to pivot when your ask is not met, and having a way to try to increase your sales so that you look like you're a viable business that can repay those loans that you are able, when you are able to get them.
Yeah, thank you, Camille. That's great. Daniel, I think you had your hand up. Oh,
yeah, no, thank you. Camille really got to a point that I wanted to emphasize as well, which was that I would recommend going for really the smallest amount of capital that you can get away with, because I think a lot of folks think about a large loan amount that can do more, but And then you can write off that interest expense on your tax return, but at the end of the day, that's a big liability that you do have to pay back. And I would really stress the importance of thinking about, if you're not buying a piece of machinery or equipment that's putting an asset on your balance sheet to help build you some equity, how are you using this money to drive your revenue growth, increase your profitability, hire more people, and really think strategically about what you gain and how like lean you can make that. And another couple of thoughts that came to mind were also, so that short-term future of how you're implementing the cash, also really focus on your past of the business. I think a lot of folks are focused on how they're going to be successful in 2 years or whatever it is, but the lender is going to look at your cash flow in the last 6 months, 3 months, a year, these trends that are developing. And so that's really your starting point. So you have to understand what it looks like on paper. And the last idea I had was just really finding a guide like CNHD produced, or all of these resources, whether it's a SCORE mentor or a CDFI that provides TA. Now, I don't know about you all, but my high school education, typical education, doesn't include those financial pieces that really are critical to understanding how credit cards work, even on the personal side, or let alone growing a business. So really start with that education, make sure you're taking advantage of everything that's on the table out there.
Yes, I am like a big proponent of financial education and wish we had it in school, and wish everybody could go through junior achievement and all of that. So Olivia, you have your hand up, and then after that, we'll go to some of our audience questions.
Sure, thank you. I just want to add a couple things real quick. Just echoing what Camille and Daniel was saying about being really intentional in terms of the loan amount that you're applying for. I would also recommend even like itemizing your use of funds. Say if you're applying for like a $6,000 loan, break it down to like, I need $2,000 for this specific piece of equipment. I need another $3,000 for this thing that will really, create a really great return on investment. I need this much. And having that itemized will also help, if you do get less than you applied for, you're able to then, pick and choose between things that you've already broken down into smaller amounts, and it makes that a little bit more manageable. And then also just with this guide, I think it already does such a great job of showing how many different options are out there. So really being able to having to do that research and figuring out what range of a loan, or like what range of different services provide and what range is most appropriate, but being realistic about how much of a monthly payment you could actually afford, and then picking the right service and interest rate for you. And then my very last brief point would just be about knowing where you are in the timeline of your business. We've had clients apply who were just not ready for the loan amount that they were applying for, but who maybe came back a year later and had built up their credit and were ready for that. So in some ways, the advice is don't get discouraged if you don't, get the loan that you're asking for, but also just being realistic about what you can actually afford and what your client profile looks like in that moment. And so having those kind of medium and long-term goals as well when you're thinking about your future financing is really helpful as well.
Yeah, thank you. Yeah, Lou, you have your hand up, and then we'll try and go to maybe some of the questions and the audience questions.
Yeah, thanks, Marcella. And just to piggyback on what Olivia said, I talk to many small business owners every day who they want funding, but they don't quite know what they want to use it for. It's when you really get down to it, on top of having that itemized list, it's not just having a list of expenditures on how you're going to use this money, but you need to be able to explain how this is going to actually increase revenues in your business or save you on expenses, and why this should work into the debt to income ratio, the same thing that we use to judge whether or not you can afford a house or a car, why this is going to work for your business and what effect it's going to have on it. But before you do all that, the most important thing that you need to do, which most business owners neglect to do before calling or reaching out, is to get your financial house in order, meaning just simply, without making it really complex, get a version of QuickBooks. Okay, QuickBooks Online. Link it to your business bank account, bucket all of your expenses, and then use that data, especially if you're a startup younger than 3 years old, and integrate those real numbers into your business plan. And there are services like liveplan.com out there where you can simply take that information, those financials, plug it in, and then as a lender and an underwriter, we can clearly see what the business has done so far, what type of capital infusion, what amount of money you want to put into the business, what it's going to do for you, how you're going to spend that money, and how it's going to have an impact. And this way, as you prepare yourself to reach out to lenders, you have exactly what you need in line. And don't worry about making it perfect. Everything's going to go through iterations. So as long as you have the financial house in order, the plan in place, the list in place, then we can start from there, and you can adjust moving forward to put yourself in the best position to be approved.
So I think here's a question that kind of comes from the audience, but I know that I have watched, trainings in the last few months from many of your organizations, WAKIF, DSLBD, WAKIF, or LEDC, and I've watched some of the training you do on some of these topics for small business owners, and then everything you've all just said today. I think it shows how important it is for small business owners to have access to training, but also the coaching, like you mentioned, like the SCORE mentors and having that one-on-one coaching. And then our guide is also a useful resource as well. So all of these resources for small business owners, one of the challenges you mentioned is how do we get that information to the small businesses? And so a couple of the questions in the chat are how can we market? How can we do outreach? How can we get the tools and resources and information and access to training into the hands of these small business owners that really need them? It's a challenge, but that sort of dissemination channel or marketing channel of really reaching out and accessing small business owners. Do you have thoughts on that? Because I don't know, maybe there are some organizations that can help play that role. I don't know. I don't even know if CNHED, because they have many members, have ways of, channeling that information, getting the access. Any thoughts in terms of that?
I'll jump in because that's a perennial challenge for as long as I've been trying to get information out there. So multiple ways, don't just settle in on email, which is very tempting. And this is what I'm going to suggest is probably like the slow walk, but I think it's a systemic change, is getting businesses to actually use it, and they will talk to other businesses. Unlike grants, loans aren't as competitive, so they probably won't feel it's okay to share this information because they can all access the loan. But getting it into the hands of businesses and maybe showcasing them as users, it also might help influence any updates to the guide in the future, depending on how they use it. I know for me, I'll be using it when I'm coaching clients to kind of walk through the bigger picture. While there are resources out there like the toolkit that has all these records, the guide's really great for connecting the dots and showing the bigger context. I think that's helpful when talking with clients that we have. So one-on-one, and then also of course email, and if you can afford printed copies, but I know those are probably fairly expensive to hand out.
Yeah, any other thoughts on how to do outreach and get small business owners this kind of information and access to training and technical support? Or is that just a continuous challenge?
I can jump in. I do think it is a continuous challenge. But I think a lot of times, we have, like we've previously mentioned, that all of this information does tend to be out there in some form or another. So that's not necessarily, we have this guide out, we have our websites and different information out there, but given the nature of the industry and how people have been excluded from it, I think it's more so a shift of perspective and not expecting people to come to us to find that information, but for us to really go out into these communities and come to them. And so that could be cold calls, that could be, I think we're this semester instituting a block walk as well. So where we're actually physically going to neighborhoods and like knocking on businesses' doors and actually talking to them and doing physical outreach. And having that face-to-face connection where we can actually explain some of these different resources. So other than just like, not just the tangible actions that we can take, but more so a shift in perspective, I think is also a really important aspect of the outreach.
Yeah, I love that. I love the idea of the block walk. Maybe CDFIs, maybe y'all need to start selling cookies and going door to door or something, giving your message and selling cookies. So we have just a couple of minutes. If anybody has any final thoughts, or I don't know, Yvette, did I miss any good questions there in the chat? Does anybody have any final thoughts? Go ahead.
Yeah,
Yvette.
just one quick thing. We talked a lot about, online lenders, and obviously if you're, already in this webinar, you already have some type of awareness of CDFIs, which is great. I think, one of the biggest challenges is you really need to be wary of lenders that offer speed. So, when you type in small business loan online, you're going to get a lot of the fintech who offer, quick financing in 3 days, 7 days, money in your bank tomorrow. And it looks flashy, it looks great. And if it's too good to be true, it probably is. And unfortunately, they hide a lot of their interest rates. They make it sound, low interest, but if you actually read the fine details, they're charging you 25, 100% interest, but offering you cash tomorrow. So I think really being wary of speed when it comes to small business lending, because you're going to end up paying the price for that convenience and that speed.
Yeah,
Just a
excellent.
second
Go
what
ahead.
Kelly said. I worked in fintech for 11 years. The rates are very high. Typically per annum, 35, 40% on your money, daily payments, weekly payments, if you're lucky. And so organizations like CDFIs are a godsend. And with their products, the terms, multi-year terms, 4 to 6 year loans, SBA, non-SBA loans, credit's not a concern because it's built for you. We understand, and it's put in place for those who come from backgrounds where financing, it's just been hard. Of course, you may have had repossessions of cars or troubles with the home loan, or evictions, all types of things that happen to people within our community. That's, CDFIs are the place for them. It's not necessarily the place for folks who can qualify for bank loans, because of course, if you can go there, you probably should. But if you can't, and you have troubles in your past, then of course, making sure that you reach out to organizations like WAKEF and LEDC, within the city, and Capital Impact, these are the places for you. So I just want to leave that, and also spread the word, let people know. Of course, we have a long way to go in terms of nonprofit agencies mastering the use of Google AdWords and telemarketing campaigns and mass mailing campaigns and all those other traditional verticals in marketing that your large corporations and fintech and blue vines and cabbages use online, because they have huge budgets. These are 800 million, a billion revenue generating machines each year. We're not. So of course, as we get our act together, help spread the word, let folks know, and we can help each other. It'll be mutual. So.
Well, thank you. We are out of time. That's a good last plug for CDFIs and organizations, microfinance institutions, and all of the great work that all of you are doing for small businesses, for lending, providing technical assistance and training. So thank you all so much for joining today. This has been a great panel. We hope that the guide will be another useful tool that you can use and share with small businesses, and we'll all try and get the word out. So thank you so much. I don't know, Yvette, do you have any final words to say at all? Oh, I guess we are ready to sign off, and thank you all so much. Have a great rest of your day.
Thank you. Great job.